Hi friends, good evening all of you. Welcome back to CAP classes. In the previous session, we have seen the meaning of an asset in the context of accounting standard 10 property, plant and equipment and the recognition criteria, isn't it? So in this session, let us take this one step further to discuss various other aspects of AS10. As I told you earlier, AS10 is one of the biggest, huge standards, like it is like an ocean. There are so many concepts involved in this. And in 2016, when this particular accounting standard is revised from 2018 onwards, students started reading this. This is the first standard that is converged with IFRS actually. Whether you are speaking about CA intermediate level or final level, AS10 property, plant and equipment is the first standard that is completely in lines with IFRS. That is the reason it is huge. And also one more reason is previously AS10 fixed assets is there, AS6 depreciation accounting is there. So both of them are merged into one standard. So actually it was two standards. Now it is one big standard. Okay. So put the heading AS10 property, plant and equipment. So in this, various things that are to be learnt by you is definition. What is the definition of PPE? And then meanings of various things. Okay, that is the basics. That is, LKG level. I trust you'll be able to do it easily. Second thing is recognition. Second thing is recognition. So for recognition, two rules are there. One is Feb. What is Feb? Valentine's Day. No, not that Feb. Future economic benefits. Feb here stands for future economic benefits. Okay, second one is measurement. Measurable. What is measurable? Cost is measurable reliably. If these two conditions are satisfied, then you can recognize the asset. Up to this, we have already completed. Then the next one is subsequent cost. Subsequent cost. Say, for example, you purchased a car. Ta-dan, 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 ta-dan. Oh my God. Such a creative lecturer. So you purchased this car. Okay. So this is, say, for example, 20 lakhs. So you capitalize this 20 lakhs. And this asset has 5 years life. It can be used for more than 5 years as well, but your intention is to use it for 5 years. Now tell me, during 5 years, will you incur any cost on this asset? The answer is yes. The cost can be, what are all the costs? So maybe road tax you will pay, toll gates you will pay, insurance you will pay, petrol, servicing. Okay, regular repairs. Okay, filling air in tires. You fill air in tires. Okay, then fast tag, of course, that comes in toll gate tax. So there are so many expenses associated with the asset. There are so many expenses associated with the asset. Do you think all these can be capitalized? Do you think all these can be capitalized? The answer is no. But do you think there may be a situation where you have incurred some subsequent cost that enhances the future economic benefit of the asset? Do you think that can be capitalized? The answer is yes. So Pavan sir, when I'm incurring subsequent expenditure on an asset, on this car, I am spending some money. When can I capitalize it? When that is to be charged to P&L? That is what we are going to discuss now. Okay, so put the heading subsequent cost. Subsequent cost. So the subsequent cost can be This subsequent cost can be day-to-day servicing cost. Day-to-day servicing cost. Shall I capitalize this? No. No, the accounting standard clearly said any day-to-day servicing cost on the asset is something like its repairs and maintenance cost. Okay, like for example, you look at a shopping complex. You look at GVK Mall or Mantri Mall, Orion Mall kind of shopping complex. There are escalators, there are elevators, lifts. So don't you think probably this GVK management might have entered into an agreement with some lift maintenance company, with some engineering company who's into maintaining these lifts, and on regular basis, need not be on daily basis, on regular basis, some staff from that engineering firm will come and inspect whether the lifts are working properly, whether the belts are working properly, whether the elevators, escalators are working properly, whether there is any lubrication or some fillings required or some replacements of some oils required or anything is to be done. All this on daily basis they'll say, isn't it? On regular basis, not daily basis, regular basis. So do you think that will enhance the future economic benefits of the lift or elevator? You go to an airport. In airport, this luggage conveyor belts are there. Okay, that needs maintenance. Lifts are there. That needs maintenance. So many machines you can see, a lot of equipment, a lot of machines you can see. Everything needs equipment. Everything needs, this servicing. If you go to Europe, there are 2, 3 popular brands. I'm sure you might have heard that in India also, not a big deal. Costa, Starbucks. So regularly we go to Costa and Starbucks to have tea, coffee. Do you know the coffee vending machine? I have seen it 3, 4 times. The coffee vending machine, I'll go, just you can swipe the card, you contactless card, and then you can take whatever cup you want. Sometimes the machine says the machine is under servicing. It is not like, in India when we do not, when the machine is not in operating condition, they'll say that this machine is under repair. No, it is not repair. This coffee machine, this servicing, whatever it is a kind of cleaning. They do it on daily basis. Obviously, anything is to be cleaned on daily basis now. Okay, for that they will have separate, cleaning detergent tablets specifically made for that. So it is a different process. It will be washed by hot water and then by cold water. So it is a process. And do you know, one person will come to do that. Maybe probably in Costa they will train one internal employee. They know how to operate it. It takes half an hour of time. So different parts. The coffee blending. This coffee machine is blending. This small machine. Okay, must be. It is little bigger than your wet grinder. That's it. That small machine. Now you imagine in industries what level of machines will be there, what level of preventive maintenance is required, what level of repairs and maintenance is required, what level of department, how many people will be there. Look at Indian Railways. How many people will be there to, do the day-to-day servicing and maintenance of, you call it rail tracks or you call it coach, that bogies, engines. How big this could be? You look at your KSRTC, how many buses will be there, how much of maintenance is required. So this day-to-day servicing cost is there, no? This is essentially in the nature of revenue cost, essentially in the nature of revenue expense. So this is to be charged to P&L. Charge it to P&L. This is an expense. This is an expense. As simple as this. This is an expense. Charge it to P&L. You understand? Now look here. Cost of day-to-day servicing. Cost of day-to-day servicing are primarily cost of labor and consumables. It can be labor cost, it can be consumable cost, and may include cost of small parts. Okay, you are changing some nuts and bolts or lubrications or some consumables. The purpose of such expenditure is often described as for repairs and maintenance of the item. What is the accounting treatment? Close your eyes, charge it to P&L. Charge it to P&L. Don't even think more about it. So read the para, accounting treatment para, read that. An enterprise that does not recognize in the carrying amount of an item of PPE the cost of day-to-day servicing. Rather, these costs are recognized in the statement of P&L as incurred. Simple. Second important one, this one, replacement of major component. Replacement of major component. Replacement of major component. So here, this word materiality is to be established. If it is replacement of a small component, Pavan sir, I have a car. I changed the tire because this tire has become flat 2-3 times in the last 6 months. So I just changed tire. I have spent some 5,000 rupees for that. Should I capitalize? May not be looking at the situation. It is not material, so charge it to P&L still. Also, can I capitalize it? You can debate. It can be capitalized, but you need to think when I am replacing a component, is it a major component? That is the question. Is it a major component I am replacing? I give you the best example, okay? 2 examples I give you. One is Airbus. This airplane is there, no? The exterior, the interior, and all this body of airplane is one way. Okay. The engine is a separate component. So if this is the Airbus, this is engine. Now you don't ask, sir, which part of the world Airbus will be, aeroplane will be like this? Your grandmother invented this. No, my grandmother did not invent. This is just, I'm an accountant. Then you have put one car above and saying, wow, I am creative. Sorry, I take my word back. I cannot draw aeroplane now. So this is engine. So this is asset, okay? This is full asset. In that full asset, this component is there, no? Now imagine the life of this is 20 years and the life of this is, say, for example, 5 years. Possible? Now, after 5 years, 80% of the asset is useful, but the engine, which is the heart, without which the flight cannot run, cannot fly, that particular part, which is a significant, major part, is to be replaced. Sir, can I capitalize this cost? Obviously, yes. Obviously, yes. You understand? This is example one. Second example is, do you remember in accounting standard 2 also I gave you this example? In your school, in your college, you will see that, what is that called? Projector. In that projector, one lamp will be there. Projector lamp. That is to be replaced. Even when you go to hospitals, you will see a lot of equipment, especially in that X-ray labs, pathology labs and all. There are so many equipment, okay? So in that equipment, there are some components which are to be replaced frequently. So in these examples, can I capitalize this new component cost? The answer is yes. The answer is yes. So they have given some examples. Let us see the examples first. A furnace may require relining after a specified number of hours of use. Obviously, aircraft interiors such as, and another good example in this Airbus is, have you ever seen any airplane when you are a frequent flyer, you can vouch for this. Have you ever seen any of the aeroplane's interior? Array, this is very old. I bet you cannot. I have seen aeroplanes enough number of times in my life, but whenever I enter, it gives an impression as if they bought it day before yesterday. That could be 5 years old flight also. That could be 10 years old flight also. Sir, how that is possible? Simple. Chairs and all are there, no? That the chairs fixing and the cushions and the exterior of the chairs, whatever the cushions are there, whatever the cloth is there, that will be replaced regularly. Inside structure of the chair could be same. Okay, but the outside, the appearance, it is something like changing your sofa cover. Okay, you can use sofa for 10 years, but sofa cover will change, no? So like that, some chairs, some cushions, exterior, clothes, curtains, these kind of things, they change. But that will not come in 1 rupee, 2 rupees, no? What if they spend 5 crores for that? Okay, so aircraft interiors such as seats, galleys may require replacement several times during the life of airframe. Life could be 20 years, whole airplane, but its life can be 1 year, 2 years. 3. Major parts of conveyor system such as conveyor belt. I was speaking about this. Wire ropes, etc. may require replacement several times during the life of conveyor system. Even I have seen in power plants, this coal will be carried, no? It will be carried through this conveyor belts only. They will replace it regularly. Replacing the interior walls of a building or to make a non-recurring replacement. That giving another example. If you have a building, you are changing the interior. These are the examples. Now, Pavan sir, what to do? Can I capitalize the replacement cost? Yes. Yes, right now. This replacement cost, accounting treatment, accounting treatment. Accounting treatment. Under that, right? 1. The cost of new component is to be capitalized. That means add it to the cost of the asset. To the cost of the asset. Hey, what the hell is happening? The cost of new component is to be capitalized. That is added to the cost of the asset. This is easy. LKG boy also will understand it. Okay. 2. The WDV of the old component, which is replaced, is to be derecognized. So there is one recognition and one derecognition. That means subtract it from the cost of asset, from the cost of overall asset. So this is capitalize. That means recognize. So there is one recognition, there is one derecognition. There is one recognition, there is one derecognition. You understand? Now I will give you an example. Write it down. Problem number 1. Okay. In our material I have prepared cap classes, there is an excellent example for this. In ICA study material, at intermediate level it is not there, at final level it is there. That we will discuss here. Okay. So imagine there is an asset. Total cost of WDV of an asset is, say for example, 10 lakhs. Today, WDV, it is carrying amount of the asset, it is not the historical cost. Historical cost minus accumulated depreciation minus accumulated impairment loss is equal to today's carrying amount of the asset, that is 10 lakhs. Okay. Then it has a component. It has a component A, which is to be replaced. Which is replaced with a new component. With a new one. Cost of new component is cost of new component is rupees 1 lakh. Cost of new component is rupees 1 lakh. WDV of old component is 40,000. What is the accounting treatment? What is the accounting treatment? This is the question. WDV of an asset is 10 lakhs. It has a component A which is replaced now with the new one. Cost of the new component is 1 lakh. WDV of the old component today is 40,000. Unamortized portion of the old component should be recognized. That is the principle. So simple. This plus this minus this is the answer. So what is the accounting treatment? So you will write step 1. The cost of new component is to be capitalized. Step 2. The unamortized value of the old component is to be recognized. Step 3. Therefore, the carrying amount of the asset is equal to 10 lakhs plus 1 lakh minus 40,000, that is equal to 10 lakhs 60,000. This is the answer. This is the answer. Simple. But sometimes, see, step 1. There is something called charging depreciation based on components. So previously, before this accounting standard 10 was revised, property, plant and equipment came, like, when you were in accounting standard 10 fixed assets era, like 5 years, 6 years back. Then you used to consider an asset as a single unit and you used to charge depreciation. But now we follow something called componentization. We follow something called componentization. Also, what is this componentization? All the major components of this particular asset having different lives. Oh my God. Different major components having different life are to be depreciated separately. Yes. That to be depreciated separately. So, see, this is simple. Why this is simple? Because you know that this is 40,000. From your accounts, this is easily ascertainable. This is easily ascertainable. But where is the challenge? The challenge is this. Hey, what the hell? The challenge comes here. How do I know what is the written down value of my old component which is replaced now? That is the question. If you follow componentization, then only you will come to know what is the WDV here. Otherwise, you need to do fair value accounting and you need to, plug it back, which is actually difficult. In India, we do not have this concept. Now, imagine. In CA final, this problem is there now. If you do not know that the WDV of old component is 40,000, what will you do? See, it is something like this. This is a pen, this is a pen. Okay, this is my old component and this is my new component. Now, this is 1 lakh I know, but how much is this I do not know. I bought it 5 years back. 5 years back when I bought, assuming that it is 1 lakh. Assuming that means the cost of new component will be taken as the basis for valuing old component WDV. What? The cost of new component 1 lakh will be taken as the basis to calculate the WDV of the old component. So new component, we are in say 2023, 1 lakh. This I know. Old component I bought in 2017. How much? I don't know. And I don't want this. I don't want this. What I know, what I want now. I want. Why all these things are? I want WDV of this. I don't want old component value in 2017. I want WDV of the old component in 2023 when I am replacing it. Pavan sir, that is not there in our books because in 2017 when I bought the asset as a single unit, I did not apply revised accounting standard and property, plant and equipment. This happened before AS10 was revised. That time in India, no one told component utilization accounting. So I considered the whole asset to be one unit and I charged depreciation. This is the difficulty in practical accounting. Transition from old accounting standard to new accounting standard, we get gone. Now imagine if you are thinking about this bloody thing. Imagine I have a client who is a tobacco manufacturer and exporter. Probably in India they come in top 10. How big it will be? Their plant could be 1,000 crores. So what our new accounting standard said, take this 1 lakh as the basis to calculate this and then to calculate this. Now, they use time value of money. Pavan sir, what are you talking, Pavan sir? What are you talking? Time value of money comes in finance, no? Pavan sir, I think your chip has gone. Telugu we call it chip dobindi. Your chip has gone somewhere. You are teaching accounts, but in blood you are a finance teacher, so you are gusafying time value of money in accounting also. I will tell you how much of time value of money you use in financial management. Throughout my life, how much of time value of money I use in financial management. Can you believe that much we are using in accounting now? Because all IFRS are based on fair value accounting. But our accounting standards are historical accounting. We used to follow cost model. Now everybody is following revaluation model. Some companies stopped charging depreciation. Why? Every year there is value. When you revalue the asset every year, there is no need of charging depreciation. No? Last year I bought it for 100 crores. Today it is 82 crores. So I am writing it to 82. So depreciation is over. Next year if it is 94, I will write it up to 94. Depreciation is over. Is it possible? Yes, especially some of the intangible assets, especially when you acquire that, you don't need to follow amortization because some intangible assets will have unlimited life, but your accounting standard 26 said there is a rebuttable assumption that the life of intangible asset cannot be more than 10 years. So this is accounting standard in India, AS 26. Now IFRS came and asked, oh hello, excuse me, तो मैं क्या करूँ मर जाऊँ? मेरा कोई feelings नहीं है. IFRS left the chat. No. IFRS said, beta listen. intangible asset can have infinite life. Okay. Then what to do? How will you charge amortization? Land has infinite life. That is the reason you could not charge depreciation on land. Yes or no? Correct. Now, intangible assets like goodwill or brand value, which you have acquired, also may have infinite life. Correct or no? Google acquired YouTube long back. Okay. Do you know the consideration how much Google paid to YouTube when they acquired it long back? I think it is some $167 million or something is there. No, $1.6 billion. Yeah, it is around $1.6 billion. That was the consideration paid by Google to YouTube. Do you know YouTube earns that now in 2 weeks? The 2 weeks revenue of YouTube today is the purchase consideration paid by Google to acquire YouTube. Now you tell me, do you think that hundreds of crores of goodwill, whatever Google has paid to YouTube, 10 years is over? If it is in India, if Google is in India and YouTube is in India, ICI prepared an accounting standard. They might have told you, hey Google, you have paid any purchase consideration including goodwill to them. Yes sir. What is that? Sir, you have paid 5,000 crores goodwill, sir. For example, say 10 years of useful life, charge that 5,000 crores divided by 10, 500 crores to your P&L, and this intangible asset, that means the goodwill paid on amalgamation or acquisition should be written off in 3 to 5 years or maximum 10 years. Google will ask, have you lost it, idiot? Do you think, the life of this YouTube will be 3 to 5 years or 10 years? 10 years is already over. How much the value increased? How can you say that within 5 years you have to complete this? Stupidity it is. Okay, that means YouTube has infinite life. Infinite need not be 2,500 years. Okay, infinite means more than foreseeable future. More than 5 years, 10 years, 20 years. Okay. Now, I cannot charge amortization. Then Pavan sir, what to do? Simply go for fair value accounting. Every year, do fair value. What is the brand value of YouTube? You calculate. If there is impairment, charge it. If there is increase in the value, you recognize. Isn't it more practical? I liked it. This makes a lot of sense. So, because of fair value accounting, time value of money comes into picture now. Now, what is cost of new machine? Cost of new component? 1 lakh. WDV of old component, how much? I don't know. Take this as basis, apply time value of money, and calculate WDV of old component. Okay, how do we do that? Now you take interest rate applicable to this transaction. Say for example it is 12%. Now calculate 1 lakh divided by 1 plus 0.12 whole power if you have used it for 6 years. How many years you used? From 2017 to 2023, you used it for 5 years or 6 years? Whatever the years is, take it. Now you calculate. Take calculator. Take calculator. 1 lakh divided by 1.12. You got 89,000. Again divided by 1.12. Again divided by 1.12. Again divided by 1.12. Again divided by 1.12. 1, 2, 3, 4, 5, 6. 50,663. It could be wrong also. Doesn't matter. Okay, 5 years, 6 years, I don't know. I have charged 1, 2, 3, 4, 5, 6. I think it is correct. 50,663. 50,663. So if you do not know the WDV of old component, you will calculate it like this. Now your answer should be 10 lakhs plus cost of new component 1 lakh minus 50,663. 11 lakhs minus 10 lakhs 49,337. ICI can kill you with this question. See, first in the first part A, they will tell you this is the question. This is the question. Part B, they will ask you if the company cannot extract the unamortized part of the old component from their books of account, considering an interest rate or cost of capital of 12%, what will be the revised cost of total machinery? Student will get heart attack. Pawan sir, what are they talking, Pawan sir? This is the answer. Welcome to Cap Classes. You understand? So, any doubts before we move on? Any doubts?